Hello, everyone. Welcome back to Reimagine 2020 V4. I'm Roshan Mirajkar, one of your hosts for the conference. I'm very excited to be joined here today by the CEO of Uphold, JP Thieriot. And I'm really excited to see what you might say about everything going on. JP Thieriot, thank you so much for joining us today. How are you doing in general, and how has this whole virtual situation been for you and your team? I know you have a very global team.
Well, hello, and thank you for having me. Yeah, it's been a strange year, obviously, for all human beings. For our team, I suppose less hard and less strange than for many folks. I mean, I imagine the difficulties of people who run restaurants or hotels or depend on tourist seasons and that kind of stuff. And obviously, my heart goes out to them. For this business, I think it's obviously benefited from some of the monetary policy that has followed in the wake of COVID. And in terms of remote work, we were already a fair user of remote work methodologies. We had offices in about a dozen locations, and we've now pared them back to 2. So we've kept our main hub in Portugal. We've kept our New York office, but offices in California and other places we've done away with. But it hasn't been a big change for us in that regard.
Yeah, that's interesting to hear. I think a lot of other crypto-based companies, infrastructure-based companies, can kind of say the same, where we've been living in this virtual world, but now it's actually virtual. What I wanted to ask you is, what does it mean for you and your team, given that Uphold is such a large infrastructure player? You're laying out the infrastructure for viewers out there that don't know. There's been a lot of popularity around things like the Brave browser, and you've had similar partnerships there where you're partnering with a lot of the infrastructure that not just financial, but really to reach the end user. So in this weird, uncertain time where I know Uphold is connected to basically the entire world, you deal with multiple countries. So what does it mean for you and your team that a lot of the things that you're working on, and we'll get into some of your product updates in a second, but a lot of things that you're working on are kind of coming into fruition, like we actually need them right now. So how does it feel for you and your team?
Well, we feel grateful. Again, given how hard this has all been for certain businesses, our business has seemed to benefit, right? So first off, very grateful that's the part of the market we sit in. It's interesting. Some of the products that we've chosen to launch, I suppose because of elements of the crisis, like the gold product we launched, we're super proud of. I guess I've been aware of gold since I was a teenager, but I had neither the money nor the I guess attention to detail to go figure out how the hell I actually go buy it. And so figuring out a product that's pure gold, it's not ETF gold, that has 0 custody fees, that is done in partnership with the largest refiner of new gold in the world, and in a place where the government is guaranteeing that gold, like the U.S. guarantees FDIC dollar deposits, making that digitally accessible in whatever fraction, making it spendable on a debit card. That's a particularly useful product for somebody living in Argentina today. I was noting yesterday that the peso has run to, I think it's like, I don't know, 180, where it was, half of that a few months ago. So yeah, it's a particularly useful product for people, depending where they live, and given that that card is all virtual, it obviously helps in non-physical e-commerce oriented transactions, which have also benefited wildly from this strange year we're all living.
Yeah, and it's exciting to speak to someone like you because I think you have a different ethos than a lot of people in the crypto space and in the traditional finance space. And what I mean by that is, I see that with a lot of recent product updates that you all have launched. One thing I want to get into is, you launched this new equities trading product. Can you talk about that a bit? I'll let you talk about it more, but I'm really excited to see how you're actually bringing 24/7 trading into a financial into a financial market that is still stuck in olden times. How are you doing this? And more importantly, why did you feel it's necessary for you and your company to enable something like this? Has never been done.
Sure. Well, so the first sort of I guess new functionality or access really that we would have introduced was fractional equities available in places outside the U.S. kind of full stop. Far as I'm aware, other fractional houses, Schwab, et cetera, are not accessible to the folks in Argentina, Brazil, or Uruguay, or wherever, right? So the fact that I think this is first time access for somebody with a mobile device living in Brazil, that's the initially cool and new thing, and that's sort of under the banner of democratizing investment, right? So the U.S. stock market, is not. It's interesting how low participation is within the United States, but outside of the United States, it's almost non-existent. And obviously, the stars of this market are companies that people all over the world are very, very familiar with: Apple and Amazon. And it turns out, after a few months of launching this, that Tesla is the real darling of these kids making their first investment, which I find endearing and interesting. And I've tried to get at what that really means, and I have some theories on what it might mean. I know it rankles the Charlie Mungers of the world who have referred to companies like Robinhood as starting these kids' investment careers off on, I believe he said, heroin. But this same guy, or the partner of the guy that referred to Bitcoin as rat poison squared. So clearly there is a divide between legacy thinking and what interests millennials. And if millennials feel like handing Elon Musk a market cap that gives them, among other things, an acquisition currency and a platform from which to impose his worldview, perhaps it means that they enjoy his worldview a lot more than that of a company that owns trailer parks and whatever, tobacco and other sort of old worldy doomsday machine type stuff. So either the kids are really, really stupid, or the kids are essentially, they found a different way of voting with their wallet. For my generation, voting with your wallet was, reaching for the organic bananas. But maybe for this generation, I mean, I don't know. There's still, half these guys are saying this is going to end in pain, and it might. It's a frothy market, and markets go up and down. But I would like to think that the kids are probably aware that Tesla fundamentally should not be worth more than all the other car companies in the world combined, right? That would be a bit of a stretch. However cool Tesla is, and I'm a huge fan. I honestly think it might mean, yeah, sure, it might be overvalued, but again, I want to see what this guy does with market cap versus what these jerks have been doing with it. So
Yeah, as a millennial myself, I can definitely attest to that we do definitely have different spending habits and how we think about different assets. We all grew up with technology that has continued to improve at a exponential scale. However, not to say things like assets like gold are bad, but they're just so hard to transport and to spend. So it's really exciting to see that you're also enabling that. I think it's really interesting how, typically in our crypto blockchain industry, everyone always talks about this importance of interoperability, right? And they usually mean blockchains talking to each other, or different fiat on and off ramps, and they're super important. What I find interesting is you are sort of bringing interoperability between the old financial system and the new financial system. Um, how do you think this is going to affect assets in general, in terms of how they're valued and how they're used? I was reading that, is it true that if I can buy Bitcoin on a platform like Uphold, and I can trade it into a Tesla trade without going into the US dollar and waiting like a whole week just to do that whole thing?
Yep, and you can do it all instantly. And in fact, I think we're probably the only place in the world that would allow you to do something even simpler, which would be trade Google stock for Tesla stock without going Google dollars back Tesla, just anything to anything, with implied pricing, which means that whatever the spread might be on that trade, it is likely to be less than two entirely separate trades aggregated. So look, I think the possibilities are as endless as the possibilities were when one was contemplating the early days of the internet. It basically means that this sort of monopoly that governments have had on the unit of account denominating the blood flow of the economy, that monopoly is gone, and so now folks, again, and it's useful to bring up extremes like Argentina or Venezuela, because it's just more illustrative of the point, right? I mean, libertarians and libertarian Americans get worked up about the central bank and the Fed and blah 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 and the dollar, but I mean, Americans have had it incredibly good compared to the world, right? So when you bring up in Argentina, you are literally consigning yourself, or you're not by your free choice, but everything is theoretically denominated in a currency that loses value so quickly that if you're not spending it almost immediately, you're losing purchasing power, right? And you think governments would learn, but they don't. The Argentine government has just put on stricter and stricter and stricter currency controls. Last week they were actually putting National Guard type folks in the downtown streets where people go to change money. So this sort of outdated belief that those sorts of rules are going to fix anything, they don't. They just perpetuate the agony of the folks that are forced to transact in this rapidly devaluing thing. So the new world that's opened up, when you're able to digitize and fractionalize any unit of account and essentially make it spendable, and now it's a whole new world, right? There's still, I've tried to, just to help my own mind out, draw graphs of where things reside. It's all about what the consumer's expectation is in holding something, right? If I'm holding gold, it's probably because it's a hedge against, currency devaluation or inflation, or however you want to describe it. If I'm holding Bitcoin, it's because I think it's going to appreciate. And so there's this spectrum where the more quickly something devalues, the faster I need to spend it. The more aspirational my holding of it, I want a moonshot one day, the less likely I'm going to spend it. And I think somewhere in the middle is this sort of Goldilocks zone of things that just need to be incrementally better than, let's say, the dollar, because the dollar has always been the best fiat currency. So something that will do better than U.S. inflation, which is whatever, 2.5% to 3% a year. And I think there's lots of denationalized currencies that could fit that bill. I've suggested in the past that might be an ecosystem like Braves, where you have tens of millions of users, you have real supply and real demand, and as an advantage over a fiat currency, you have a fixed supply. So whatever happens to Brave, they're not able to print any more BAT. Makes it an interesting currency. There's apt to be a bunch more. We're actually designing some at, we've set up something called Universal Protocol, which is a partnership between Uphold and a bunch of other leading crypto companies. And really, we have an ability there to create currencies almost off an assembly line. So we've got a design on a few that we think are going to be amazingly cool. Look for those here in the next month or two. But units of account that are neither super rarefied cryptos that have to do with some super rarefied ecosystem that the mass market is not going to understand. It's more conventional stuff, commodities, baskets of commodities and other things. It should be pretty interesting.
Yeah, that's a lot to take in, and a lot of interesting points there. Just thinking here for a second, but what I kind of wanted to get more into based on what you just said is, do you think that the U.S. is kind of in danger of being left behind or losing their competitive advantage? And my question stems from kind of what you said in terms of, the U.S. has had it easy in terms of what we go through with the Federal Reserve and the different rules or how we deal with our money compared to other countries. It seems like one of the things your platform is enabling is kind of removing those arbitrage opportunities that most, let's say, Americans benefit from. Like, I've seen that in the traditional finance world, a lot of profit making and competitive advantages come from the making of themselves, right? I love things like the New York stock market and even Bloomberg, but I feel like a lot of those data terminals, they're intentionally set there so that regular people don't have access to it. Now, with your platform, one of the things you're enabling is international investors can now gain that same exposure. And you said you're doing it at a micro level where theoretically someone in an international country can buy very small fractional pieces of Tesla. And I think maybe one could say a lot of the wealth may stay in specific countries because of those arbitrage opportunities. But if you take them away, I'm interested to just hear your thoughts on, you can kind of answer this from maybe a stable coin or central digital currency standpoint, where do you think these other countries are going to have more of a competitive advantage if they just launch their own stable coins, and you see quick adoption, where maybe one day in the future, maybe whether it's a year from now or 5 years from now, if everyone can trade international assets, you can spend gold, what is going to be the remaining competitive advantage from your standpoint, in the next couple of years, if everything goes as planned?
Right. Well, so I guess there's a bunch of ways to answer that question. I think the most important thing that the governments need to get right is clear rules for companies that are domiciled there, right? So the only way I think the U.S. would lose, the advantage of a lot of its longstanding attributes would be if it continued to be indecisive or gray or even relatively more hostile to crypto, or let's call it finance 2.0 companies seeking to innovate under its purview, right? I heard Ripple say the other day that they're contemplating a move to Japan just simply because they know what the rules are in Japan. They're clear, they're open-minded, so you can see how they might contemplate that. But I do think the U.S. is the place that engendered Silicon Valley. The U.S. is better at having created a system, venture capital, that allows folks to take risk in new ventures and do so in a manner that expects failures and losses, right? You fail in a company under Roman law, right, as opposed to English law, and English law is applied in California, and the assumption is you're a criminal. Oh my God, you had a company that failed? You're a criminal. Whereas in Sand Hill Road, you had a company that failed. Well, maybe you learned something and you're a more valuable entrepreneur. Take another shot, right? And the whole theory of venture capital is I'll make 10 investments and 1 or 2 will be moonshots, and the majority might fail, and a couple will do somewhere, in the middle. So that's the part that I think the U.S. needs to get right. Insofar as, like, let's say the currency side of it, whether a dollar is digital or not, it's still a dollar. And the fundamentals of a dollar are the fundamentals of a dollar, irrespective of what form that dollar is taking. If it's relatively more convenient to use here or there, that might impart certain advantages. But the value of a dollar has more to do with monetary policy and taxation and armies that can enforce things, and geopolitics, and the wants of labor unions. I mean, again, to go back to Argentina, the hilarious part about Argentina, of which there's many hilarious parts, but the fact that the unions show up in early January to demand next year's raise, it's like, talk about breaking the cycle. You haven't even started the year, and the unions are saying, this year we want a 40% raise. But guys, if I give you a 40% raise, then everybody's getting, then we've shattered the currency again this year, right? So the point is that those are the nature of forces that fiat currencies are subject to, that obviously private currencies are not. And so if private currencies are encroaching into government issued currencies usability in lots and lots of different contexts, then it goes back to Hayek's theory that there's no way public currencies, given a level playing field, could ever compete with private currencies, right? So I don't know if that answers the question. Governments have to get it right on the regulatory side. They can do whatever they want on the issuing whatever government dollars or yen. That's great. It just makes Finance 2.0 more convenient. Of course, if you're Tether, maybe that's not so good. But I think the way this will shape up is these governments will just allow the private sector to produce multiple versions of their currency. I'm not sure what they stand to gain by doing it themselves. I mean, sure, there's some gains, but the monumental effort in doing so would be impressive indeed.
Yeah, I mean, a lot of the other people we speak with, one thing that's kind of been consistent, and you might actually have some different views on this based on what I just heard, which is all of the governments and financial institutions that are bearing power right now, what's the incentive for them to give it up? And two, like kind of what you just said, what if they can do it better in a privatized way? We already see this between banks making their or using distributed ledger technology, making their own coins, making it easier, or even things like USDC, which I honestly have gotten more excited about in the past year, because I think that if we just watch price movements into Bitcoin or other assets, we might miss out on the fact that there's been a lot of volume on converting just our non-digital US dollars into USDC. So do you actually think that is the case, or not?
Well, I think I'm interpreting your question correctly. I think that money flowing from, it used to be called, in early Bitcoin, it used to be called Fiat Leak, and I always liked the
Fiat
concept.
Leak.
Yeah,
Never heard that one, but put it
was,
on the screen.
Yeah. Well, I mean, what the concept is, right, in terms of that interoperability you were referring to, banks still have a monopoly on money, right? 90 and long, is still in banks, right? And banks are still these, isolated silos of undisclosed risk that are not very leading edge in their functionality. So Fiat Leak is the concept of that stuff going up into another system. And so with a stable coin, I suppose that's what's happening, right? That underlying substantiating dollar is still stuck in a bank somewhere. But that's okay because somebody's applied a functional layer over it that is native to Finance 2.0, and so it doesn't matter what it's pointing back to, right? And again, whether the U.S. government does that or somebody else does. And by the way, our dollar stablecoin is called UPUSD, and it's sort of been in a long beta, but the transparency page and all the other stuff that we use at Uphold to substantiate, in other words, the concept of real-time transparency, that's really an innovation that I think has taken, an unnecessary backseat to decentralization as an example, right? In other words, what precipitated the 2008 financial crisis wasn't centralization per se, it was a total lack of transparency. These banks got into big trouble and before nobody saw it until it was way too late, right? So with our dollar stablecoin, the idea is, show people that it's 100% substantiated the whole time, and then give it attributes that make it as seamless as possible to flow around in this new, more modern financial system. But I think, sorry, I'm getting back to the question I think you asked does Fiat Leak into stablecoins indicate a migration or a growing interest in sort of the broader concept of crypto, or does it precede moves into things like Bitcoin? It's an interesting waypoint. It's probably a very good indicator.
Yeah, and honestly, what you just said is one of my favorite things. What you just said about the financial crisis, it actually had me thinking a bit about what the actual problem was, and I couldn't agree more based on what you just said about transparency. Had more people seen it sooner, yeah, I agree. We might have actually been able to stop it. And like you said, the decentralization, I think, is one of the consequences of that. It caused people to panic and try to rethink, try to add more stops, try to add more circuit breakers to these banks, so to speak. So I'm just curious to know, do you see any upticks of your platform during times, like, I'm asking you kind of geographically, are you able to actually see some of that data, or is it more just dispersed? Do you actually see more uptick of users, people transferring different assets in companies like in countries like Argentina in real time? Do you see this, or how long does it take?
No, you definitely see it in real time. I mean, obviously the argument's been made and it's been written about that sort of Cyprus was the forging moment for early Bitcoin, right? When Cyprus did the bail-in, where they informed everybody in Cyprus, I forget what they actually did, but it was something along the lines of, hey, all of you that have more than $200,000 in your bank account, thank you very much. We're taking that and we're doing a bail-in. So interest in Bitcoin went through the roof. It was the first big propellant, as it were. Since then, anytime there's been a shock in a place like Argentina or Venezuela or Brazil or even China, yes, our activity surges when those things happen.
Is there any specific countries that you're not in right now that you'd like to be, or what do you think is the country most suited now? Maybe just through the weird last year that we've had, is more suited now to adopt, I'll say, digital standards. Like, it might not actually be first world countries because it might be more difficult to rebuild the infrastructure. But I think it's great that you focus so much on making sure that infrastructure is right, and again, being more inclusive rather than exclusive, rather than just trying to convert people into the crypto market. You are kind of taking that approach to kind of make everything spendable.
Yeah. So I'm reminded of there was a period where to get a landline in Brazil took years, and in fact, apartments that had landlines were more valuable than apartments, that didn't. And all of a sudden, you know, mobile came around, right? Mobile phones, and so mobile phones took off. They took so long to get to a normal standard with landlines that when mobile phones showed up, the need for landlines went away. And so I think that's the answer to your question. Where these things are the most rapidly adopted is where the existing system is the most backwards or restrictive, right? So in Argentina, if the rule is, hey, private citizen, you're allowed to buy $200 per month, right? That is the law in Argentina. So, all right, well, I want to own more dollars than that, and now there's a way I can do it. Thank you very much, right? It's that simple. So I think we touched on something, the difference between DeFi and transparency, and something that hadn't occurred to me. The problem a little bit with DeFi is that obviously VCs love it and technologists love it, and I'm fascinated by it. I don't have anything against it, but the passion behind it is one driven, like Bitcoin itself, by these sort of highly libertarian views, which are obviously born by total distrust of government, right? Now, in the business in which we operate, the one thing we have to take enormously seriously is compliance, right? OFAC, KYC, AML, et cetera. The world has gotten to a point where anybody who's moving money needs to know who it is, right? And so with DeFi, it is the absolute Wild West, right? There's billions of dollars moving around and nobody knows anything about anything. So I just ask myself, wow, that's going to be something really interesting for regulators to tolerate, right? Now, the nature of DeFi is which human being are you going to enforce anything on? And I'm waiting to see what the creative regulatory solution to that is, but I don't think the solution is, oh, you know what, geez, we give up, this thing beat us. Well, no more enforcement of these laws. I mean, that would be an amazing capitulation, but I don't think it's likely. So if one is, I mean, it's silly to pit these things against each other, but transparency is, I think, something that is in no way set up to irritate regulators. On the other hand, it should be the thing that I wish regulators would insist on more, and for some reason don't, right? There aren't regulators telling banks, hey, you know what? You got to be transparent with your balance sheet. Well, why doesn't that happen? I suppose because banks have big lobbies and they like leverage and they like to do a lot of stuff that they wouldn't want to be transparent about. But there's nothing about sort of revolutionary transparency that should set up as opposite to the desires of regulators, which at the end of the day is very simple. It's protecting consumers and stopping bad actors, right? Whereas unfortunately with DeFi, you're unable to do either of those things, right? Money is stolen, and bad actors are all over the place. That's just the way it works.
Yeah, it's really hard when we talk about DeFi, the concept of who to blame. I agree. It's a complete mess because you have protocols, stakeholders, even hackers. It's hard to say whose fault it is where, but I want to ask you an interesting question going back to DeFi. Do you think that some of the things that you're enabling on your platform, I don't know what to call it, but it is kind of, it's like the DeFi that regulators might love, right? Like, because you're obviously doing it on your platform, and you're making progress. So that kind of is an indication that, the regulators are okay as long as it's transparent, but you're actually doing really amazing things, which is spending all these different assets. Do you think that for the people out there working on DeFi projects, should they continue to push their bounds in making things more decentralized, or should they cut back and try to take kind of your approach? I don't know another name. Maybe we can think of a creative. I wouldn't call it DeFi, it's decentralized, but I wouldn't call it CeFi either. Something in the middle, right, is what I'm saying. Like, all this staking and this interest bearing is really cool, but it has no transparency. And on the flip side, I still think actors like PayPal and others getting into the space is cool, but you don't have that transparency. So it's like, I feel like we're going to two extremes on both ends. And that has a lot of people, even watching this conference, kind of confused, because they're like, should I go with a platform like Uphold or buy some Bitcoin, or should I use PayPal? Like, where are my needs better served?
Sure. Well, yeah, and look, it depends on your purpose. And we've thought of, again, with UP Alliance, it's not DeFi, but there's a plurality of companies involved in this alliance, right? So it's like, what would you call that? Plural fi, a number of companies working in concert without any one of them necessarily disproportionate influence or control, and where the collective of those companies is able to do stuff and provide goods and services that that are better than what any of them individually could do. So plural fi, we'll call it. Yeah, with DeFi, we were marveling, the other day. It seems like really cool technology, to do amazing things, but not necessarily addressing any inherent issue, other than, of course, total distrust of both regulations and censorship and that type of stuff. So we'll see. I've been fascinated watching it. I think we all know that. I think the statistic was the youngest company to ever reach $1 billion in either market cap or implied market cap. Did you hear this?
No, I didn't hear
what
this.
The figure was?
No.
It was for God's sake, the name's not occurring to me, but it was 25 days from inception to $1 billion market cap.
Was it Bird, the scooter? I think it was the scooter company, Bird, or no?
No, it was one of these. It was DeFi, but it wasn't Curve.
Oh, DeFi.
It wasn't.
Let's see. Well, we can name all the fruits. Everything you can eat. We'll find one.
It was Uniswap.
Oh, okay. Yeah. Okay. Cool. Yeah. Today the term plural fi was born, and yeah, thank you for answering my little bit of a tough question, because that was honestly my question. It's like you have two extremes, and I love DeFi too, but I'm kind of going back and reviewing like some of the names. It's like, too centralized is bad, but also too decentralized is also bad, because it's just too crazy. And these regulators are never going to accept all these sushis and these different flying fruits that you can lend out, right? They're just not gonna keep it up. They might shut it down. I know I threw some really interesting questions to you to kind of to kind of end things off, I want to kind of get into knowing you a bit more. So I want to throw you a personal anecdote. Keeping up with the theme of our Halloween theme, that's why I'm dressed like this. I want to know, what is the spookiest or scariest story that you have for us, just being in the crypto space for so long, that you have encountered?
Yeah, there's a lot, and one day I thought I will definitely write a book. But let me think. I think one fascinating one was, at one point, we had, as we were mentioning earlier, Uphold is a platform that obviously we service end consumers, but we service a lot of companies like Brave and Coil, and we'll be announcing a really big one in early November. But at one point we had a couple of companies which had a relationship with one another. One was a fund, and the other one was a crypto company, on the Uphold platform. And at any rate, one of them got hacked, or apparently got hacked, and so contacted us. We started to look into it, and it wasn't insignificant. It was something like, I'm trying to remember, but it might have been a couple thousand Bitcoin, a not insignificant sum. And so when we started to get into the forensics of this, it was very puzzling, because they said that they called a number, and they're like, a number? We got a number. Sorry guys, you guys got phished. And then we looked into it, and somebody had at some point, some prior employee or some aborted effort. We did have a number. And so all of a sudden you think, oh my God, they called, a number that we owned. What the hell is going on here? Was, is this an inside thing, or it was that was ours? Nobody answered that number, because nobody has ever answered. And somehow they made it look, they had doctored their call logs, literally, and I forget how the hell we figured it out, but they'd been phished, basically, and to make it look like they hadn't been phished, and in fact had been dealing with somebody who was using our phone number, they'd gone to these elaborate ends. It took us about a month to call them both out. But the fact of the matter is that one of I think it was the guy at the investment company, between the two, was a total, he wasn't a crook out of the gates. He became a crook. He got phished, and rather than dealing with it, tried to come up with this incredibly elaborate scheme that, were it not for our clever internal investigators, we would have been absolutely pooched. But we barely got away with it. So the scary Halloween tale there is, as awesome as this industry is, and as much efficiency and improvement of people's lives it has the capabilities to bring, every little advancement brings, an advancement in every ghoul and every, scammy, hackery thing possible, and it's just something we have to live with.
I appreciate you being transparent and sharing that story. It does sound pretty scary. That's a lot of Bitcoin, but I'm glad you bounced back. You're doing very interesting things. JP Thieriot, thank you so much, CEO of Uphold, for your time today. And again, I'm your host, Roshan Mirajkar, and I'll let you all tune back in to Reimagine 2020 V4. Thank you.
Thanks for having me.